Buyers rallied to new highs inspired by optimism from cooler than anticipated CPI data, increasing the potential that we get further rate cuts at next week's Fed meeting. So it's pretty much a guarantee. So will it be a sell the news event? And if so, what do sellers need to do in order to create meaningful damage? My name is Lamont, full-time trader, part of the Chart Guys team, where I head up our futures room and the swing report. In this video, we'll cover all that and more. So let's get into it. All right. So starting off with SPY here, we don't really need these arrows right now. Well, I mean, I guess we could leave them up. These are just like the key daily levels that I write about in the pre-market prep, the morning rundowns that we do in the futures room. And you can see, we pretty much gapped right to the upside reference and paused at it. So I do think it's worth throwing these monthly pivot points on there, particularly when you're dealing with blue sky breakouts. So like you have to work with synthetic resistances. Anyway, whatever. That's not the focus of this. So again, next week's Fed meeting, it's like a 98% chance right now that the market's pricing in at least a 25 basis point cut. And so, assuming that some of this optimism is pricing that in, and it's a very well known likelihood right now, if you do happen to just get what the market expects, there is the potential for it to be a bit of a sell the news event. And if that's going to, and if you don't get the cut, then certainly it will almost certainly be a sell the bad news event. But what do these sellers need to do in order to actually create any meaningful damage? And it's really right back to watching 669.18. So just like we were thinking, okay, this was a very notable failure for these buyers to not be able to overcome the point of control of this all-time high supply on Monday with this gap up right to the breakout point over here and pretty much the low of the overhead supply, and sellers really getting nowhere off of that gap up, no corrective activity whatsoever. It's pretty good indication that this selling was weak. On Wednesday, I tweeted out that this selling was also weak if it could not get back down to 662.67, because this is our next area of demand that we are referencing right now. So next week, on next Wednesday, assuming that sellers come in and if we do get a seller news event, it's not really a big deal if these buyers can just hold over 669.18. I think we have some trade zones, right? The sell should be a bust now. The gap up takes us out, but thankfully not a big gap to make it such that the stop was more than anticipated. I did recommend, booking some profits and walking your stop. So hopefully that was safe. And I believe the buy setup, that got to target last week. If you recall, I was saying I think they're both very reasonable. And the only people who would be interested in the sell are either aggressive sellers who are likely very net long, or that's really it. Like you're looking to hedge, right? Were the only people who should have been really interested in this sell. Otherwise, it would have been more reasonable to wait for these sellers to find acceptance under the demand zone before starting to hit the sell. So that's pretty much it. And I think you can continue to do that. Like just do what works until it doesn't, right? Like we can keep applying the same logic. And I think the yearly R2 is like it's like really far away, but if we continue to rally over the monthly R1, so if these buyers can just hold the backtest of these two demand zones, this guy and this guy over here, its major point of control at 669.18 and the other one at 662.67, these buyers should be trying to get up to the R2 again. I mean, yeah, the yearly R2, not again. They have not been there. It's a really far target. So for now, we can just do something like, like maybe a nice round number, 685 on the way up there, something along these lines. I think very reasonable. It's the same logic as these setups back here. It's the same logic as this buy setup. It's the same logic, right? Because again, these sellers right now are just really not proving anything, right? It's not enough to create overhead supply. You also have to take out demand. Okay, and they had a really good opportunity to do that, especially after defending it for an entire week, and they pretty much just fumbled. So that's pretty much it for SPY. Moving on here to the Qs. All right, so the Qs, a little bit of relative strength from the pivot point perspective, right? Because you gap up over the monthly R1, very little gap fill. So like very very often when you get very large gaps, typically you'll get like a digestion kind of a move because you have a lot of folks who need to correct their positions, right? Because for example, if you were a buyer anywhere on this move up and then you see this gap up, maybe you're thinking, all right, I'll take some profits. If you were a seller in here and then you see this gap up, you have to close your position, right? So the people who are in here who are buyers see this gap as a profit taking opportunity, they're creating sells, right? And if you are a seller in here, you see this gap up, you close your position, you're creating buys, right? And then of course there's also going to be day time frame operators. They're going to be folks who are very aggressive, right? And they're looking for potentially gap fill. And then there are going to be aggressive buyers who are looking to play with the momentum, right? Incomplete gap fill, pass over the open, or like a deval setup, development value area low setup, whatever. You have all these different parties, and they're all conducting business. And whenever you get a big surprise like this, a big gap, very often you get a gap and hold day. I talked a lot about this during our Friday stream. Gave a setup as well on the Friday stream using that logic. And if you're interested in that, check out our community. Links in the description below. Anyway, so for the Qs now, I think it's the same idea, right? I think got a busted sell, but the buy zone worked out quite fine. Again, it's the same logic as these prior buy zones, right? Same exact logic. So I'm thinking now we can apply the same logic again, right? And look for this yearly R2 setup. And I'm thinking, you know, something along these lines, very similar, right? Cover these 2 point of controls and try to play up to this yearly R2, I think very reasonable. All right, so lots of space for daily higher lows. Again, if the sell the news event occurs, as long as you're holding over 608.67, these buyers are doing just fine, essentially affirming the prior all-time high structure as demand. Okay, moving on to the rut here. I don't know, did we do anything in the rut? I forget. Sell, busted sell as well. And the buy zone already got to target, but so anyways, for the rut, honestly, I don't really love the rut so much in terms of clarity. It looks like we're just potentially just balancing here, but it's very choppy, right? We've been choppy ever since we've been trying to make our way over the prior all-time high structure. So I guess if we had to take trade, I think you would recycle this, honestly, and just keep looking for bottom fishing against the lows of this structure here, and you can just aim to get to the other side. You know, I really think just recycling this zone over and over again is probably fine. You can probably like expand it a bit now that there's so much follow through over it. Something along these lines, a little bit more space here down to this guy, and we're just basically looking for more balance like this, which would be constructive as long as they're holding over this prior all-time high structure. All right, space for daily higher low, anything over 240.77 will be good for one. Again, if it's out the news next week, I would care primarily still about 240.88. Like I just consider all of this essentially consolidation above this. Okay. All right, moving on then to the Dow. I think we had both for this guy too, right? Yes, we had buy zones, worked fine. Sell zone is a bust, but did give you space for profit taking. And again, I do think you can kind of recycle this guy. Hang on a second here. I think you can recycle this. We'll just do a whole new zone. Let's see here. You know, all of this balance is over this, right? So affirming this guy is demand, multiple holds of it. There's a lot of follow through. I think at this point now, looking for a pullback play into this guy. Playing for that R2 as well. It's a ways away. It's a ways away, honestly. So maybe play up to like 480 if we were to get some retracement into this area. I think very reasonable for play in the Dow. Again, lots of space for a daily higher low or a reasonable amount. Anything over 464.48 will be good for one. And again, if sellers enter next week, I think we should care first about this guy, honestly. Like we can kind of consider all of this as balance, right? All of this is just balancing over this guy. So I would say the first place where we should be mindful, I'll just steal this line from over here. I think 462.83 is going to be our key reference to the downside next week. And as long as we're holding over 462.83, then we're affirming this local daily demand as demand, which will keep buyers positioned well for new highs. All right. All right, so for the dollar here, no change to the dollar. Honestly, the buyers actually look pretty good here. And this is just an anecdotal thing, like a social indicator kind of dealio. But a lot of my mom's friends are talking about, selling the dollar, and buying like francs. I don't know, like I hate to say it, but like inversing that crowd is very often the right move. They've called many tops, including like tops in mRNA and Pfizer during COVID's run. It's like, like church group investing and stuff like that. So it sounds messed up, but I kind of feel like I just kind of feel like that's not a good bet. If that crowd is looking to get it done. So I kind of feel like the odds of us re-entering this range in the dollar are pretty good. I really mean no offense to them. It's just, just looking at historically what's happened, and it's happened with my Korean mom as well. My mother-in-law, I just call her my Korean mom. I'm not Korean. My wife is Korean, so um, yeah, I'm just a bit wary of the sellers in the dollar, seeing follow through if that crowd is interested in dumping their dollars. But you never know, and you do what works until it doesn't. And this sell zone has already gotten to target. Would I recycle it again? I guess all things considered, due to that 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 news or whatever from my mom's friends, that would be enough for me to hit the pause on the sell personally. And if I miss it, I miss it. I don't really care about missing. It's like what Dan always says. Being willing to miss or happy to miss a trade is a superpower, right? Because the opposite of that is like feeling like you have to be in every trade. Just not the case, right? You are literally missing the vast majority of opportunity every single moment that you're alive. So missing another opportunity is not really that big of a deal. Market is always providing opportunity. So I would probably pass on it. And if anything, we could wait if you want to be a seller to see if they can find acceptance under 96.075 first, and then look to sell against all of this, which would be supply if that were to happen. Um, I think the buy zone, I would be okay with using the buy zone and sticking with that. And if you want to be a bit more conservative as a buyer, then I think wait for us to see acceptance over 99.800, and then look for a backtesting play over here, and try to get back to the middle of this range again. All right, so that's pretty much it for the dollar. Gold is looking fine, honestly. Yes, you had this like pretty major one day of selling, but all it really did so far is bring us right back down to this local daily breakout point, 4059.350. And so as long as these buyers are holding over that, well, then any consolidation, any trading sideways would still affirm this breakout from October 13th, and that would just be healthy consolidation again of this move higher. So that's pretty much it for gold. I mean, I don't hate buys in here, honestly. Like if you're a buyer off of this 4059.350 level, your stop should be under here and just chop it up like no later than here. I think that's pretty reasonable. Like, it's had a heck of a run already, but if you're a experienced momentum style trader, it still makes sense playing off of this structure. Moving on to NVDA. So NVDA, we talked about last week, the most aggressive of buyers are just playing off of this structure, and you're like looking to get back to here first. So if you got one fill, I would chop it up no later than here and walk your stop up to under here. I personally, I'm just looking to get it done back here. Like I would prefer to see some more major consolidation. If we were to make like a new low, I would be okay with that too. Like if we came back down here, make a new low, take these two lows out, don't get back down to this guy, this breakout point, and then pass back over this low, I would be okay with buying that, stop under the low of the move, give it a little bit of wiggle room, and try to play it back to the point of control. That would be fine. But I'm like I don't really love being terribly aggressive with this kind of a setup personally. But I also have position bias, so I'm already very satisfied with the amount of NVDA we hold and the amount of profits booked from NVDA. Like the cost basis is like $1, so I'm fine with where we're at right now with that. So I'm not looking to be terribly aggressive. So obviously, adjust the taste, so to speak. Moving on to Bitcoin. So Bitcoin last week, I was saying, I would be a little apprehensive to recycle this zone. It looks like it's working fine again. It's already worked a few times, but I still personally would be a bit apprehensive. Now, that being said, with the market ripping to new all-time highs now, like remember last week's perspective was because the market looked like this, right? We had just done this. The sellers were defending this all-time high supply, which is exactly what they had to do as step number one. And then step number two would be to crack through this guy. So this looked like they were doing a pretty good job of that. Now, not so much. So, I think it'd be reasonable again to be recycling this trade zone. I think maybe pick your spot. Ideally, what you'll get is like a move under 108,993.39 that doesn't see follow through, something like this, right? Don't come back down here on the pass back over, buy that pass back over, chop it up to the value area high, chop it up at the value area low of the all-time high supply, and then see if you can hold a runner. I think that's fine. Otherwise, all of this consolidation is still fine. It's still just holding over this period over here. So, no biggie. Daily higher low has been set here, 106,639. Lower high resistance is at 1140. Nope. 114082.29. Just curious to see if this moved here. No. I'm like more interested in the weekly setup. I don't think that's been setting up anytime soon. All right, moving on to Ethereum here. So Ethereum, I think if you're gonna sell a crypto, Bitcoin or Ethereum, I think Ethereum makes more sense, right? It didn't make new all-time highs. It's still just bouncing around in this massive range since 2021. Kind of like Tesla. And potentially head and shoulders, right? Left shoulder here, big old Bart Simpson head. And as of right now, you're really struggling, right? It's pretty much a battle between these two structures over here. These guys, this guy and this guy. The all-time high supply, and then, and then this fellow over here, which is pretty much the gateway into this much larger all-time high supply. So the lower structure is what made all of these highs over here, and now these sellers are doing their best to defend against that. The more acceptance that you find under 4017.56, the more likely we are to rotate back down to the lows of this massive chop. So we would be essentially coming back here. So the logic is this, right? Like the logic is this guy is what made these highs over here, right? This high and this high and this high, right? And so if we start having problems being unable to get over this structure again, like these three lines over here, these three, that would be problematic. And right now, this lower high is set pretty much right off that key level, 4017.56. That's the point of control of that structure after rejecting from the value area high of that structure. So the sellers are doing their best right now to try to affirm that prior structure as supply, which again would increase the potential that we come back down here. All right. I would think they would be trying to get back all the way down here, but there's a lot of value established here. So on the way down, if there's going to be problems, assuming we see down, right? Like, I don't know. They are still defending this structure here. This is really just a matter of calling it in the moment. But if we do find acceptance under this structure, take out this area of demand, this is more or less one-way trade. They should try to get to here first, and then the next objective should be down here. Okay, so I still think it's a very reasonable trade zone. If you want to be a buyer, I think you want to wait, see if we can find some acceptance back over 4017.56, then look for a backtest play here, play to try to get back here. Basically recycling this trade zone, but just a little bit higher if they can move over 4017.56 first. And then finally CCJ, so pretty much a picture perfect backtest of this local daily demand zone here. So aggressive buyers certainly being rewarded here, but again, I would prefer to be more conservative, look for a bottom fishing play like this, look for bottom fishing plays against this prior all-time high. So there's not much change for me. I would still prefer to play off of this structure. Call me a pansy if you wish, but I just prefer to prioritize ease. It's just like NVDA, right? Like NVDA, I would be more happy to play over here, right? But we still set up that aggressive zone for people who want to be more aggressive. It's the same for CCJ, really, right? Like if you want to be more aggressive, playing off of this local daily demand zone, that's fine. But again, like I just you just look at this chart, bigger picture. It spends a lot of time balancing, so I would prefer to just wait for a back test of this big old zone over here, because we haven't really seen that. Like if you zoom out to the monthly, this is a straight shot, so typically you get a big move out like that on the monthly. Like this move looks very much like this move, right? And this retracement was just trying to resolve this structure. So now you have this big move, and it was a back test of these highs here. So I would be more keen on waiting for that back test here rather than trying to play for some more momentum here. That's my personal preference, at least. Wow, there's like a super loud party going on. All right, so trade review. Let's see, 1021. Okay, I remember. 1021 was a bit of an error here, and it's honestly kind of a bummer because the error um, led me to not have any more risk capital for the last play. Hang on, I'm missing one. That's weird. It's fine. I'll just mark it up as we go. So this was, I bought the pass back over 6773. Looking for a chop in the middle of yesterday's end of day range. So I was just looking for a chop. And I guess I could have just tried to get it there, but I was trying to play for more R. And 6773 actually is just an error. That's an old line that I had from I don't even know where from this day. It's the low of the opening range on October 2nd. So I mistook that as this level. I thought it was this level here, which was 6766.75. That was the key level, because if I zoom out here, I'll show you why that's the key level. Here it is, 6766.75. This guy is key. Why is that key? Because this is the high of all this local daily demand, right? And you can see how buyers play defense over here and over here and over here, and they try to play some defense over here on the opening range, and then they fail. They struggle over there, hold a back test of it, and so that was the key level that I should have been playing off of, and I just made a mistake. And so that was on the 21st over here. So let's go back to over here. So I just bought this move thinking it was a pass back over 6773. And it's essentially a play off yesterday's point of control. The prior day's point of control was here. So like a little bit moved lower. I was looking for a play off here to try to get back into this range. And then I realized my mistake. 673 is just an old line, so that was a bit of a red flag. And I decided to stick with it just because it was the prior day's point of control as well. So I feel like that was reason enough to stick with it instead of just bailing on it. But it didn't hold, and so I just stopped it out. Stopped it out over here, and then I tried again on initial failure to tag that level. So now I've got my eyes on the right level again, 676. It's funny because I had the level right in the I typed it wrong there too, so a bit of a red flag actually. I talked about the level appropriately in the breakdown, but then I let this old line fool me, and so I tried again at 946. So that's just the pass back over here. So over here, this one pass back, and then gave it a little bit of wiggle room, and then I stopped it out. And that was 2 in a row, and I made a read error, so I just ended up passing on it, which is a bit of a bummer because here's the open, right? Or even if we're just playing yesterday's point of control, bit of a bummer, right? Because so I stopped out on this move on the second attempt, and I think that if we were to just like even buy this one with 1.5, trying to get back to the open here, I think this would have kept this in. Actually, it wouldn't have. So no biggie really, but you do get these better setups. Okay, so I think I was thinking about like this setup or I was thinking about this setup. This is much cheaper, right? Like, so there's not good R over here on this one, so we don't do this one here if we're just planning to get back to yesterday's point of control or the open. This one is no good, right? Actually would have been okay. So maybe you stop it out. Either way, my point is like I ran out of risk capital because of the error. And so I didn't, I remember seeing this very cheap setup. Like it was this one you might think about like maybe that's too expensive. But over here it was very cheap to get back to it. But because I made that error, I'm not allowed to do it just according to my risk management rules. And that was just a bummer. I think not really a mistake in my opinion because this trade was a mistake. But not firing away for the third time, I think more often than not, just being conservative like that is better. But certainly there are times when being conservative, makes you miss. But I think it's better to miss than to take damage. That's my opinion. But everybody has different risk tolerances. Next trade was 1022. I bought the NQ, passed back over the 10-1, 10-9, 10 daily point of control. I remember this one as well. So that's this guy over here. That's over here, and okay, so there's a few things going on here. This is that key breakout point from here, so that's this level over here. That's this guy. 23179.50. 23179.50 is this guy right here. So there's that confluence, but also this is also a hold of this guy. So here's this QQQ point of control, and on this day, it's the 22nd, so it's this day. So we'll zoom into this day on the 22nd here, and I'll show you what the play was on, because it was a bit of a confluence. So you had confluence here, right? You have, not only are you testing that breakout point, the local daily breakout point on the NQs. So again, that's over here. Here's the 23rd. So that's this low over here. But also it's the daily point of control. So I was thinking, all right, it's super cheap to play for that daily point of control and this NQ level here. Confluence pretty much at that breakout point was really cheap just to get back to the prior day's low. And then I played to get back to the 1 minute candle low, because this is a very significant candle. And so if these sellers were really going to mean business here, they should try to defend that low. And then I just looked for the rest out under the open. I'm not sure why it's not marked up here. Thought I did my homework properly, but I guess not. And then I took the rest out under the open. This was like a very straightforward trade, because the open was also here. Here's the open. And it was under the open. And it's pretty much the value area high, right? So I'm thinking, okay, well, if I'm playing for here at the point of control, I'm only really confident to get to the value area high. It's not really full steam ahead for these buyers, because we are under yesterday's 2 days of supply. So I think people, you could easily say that was like a too conservative of an exit, but in this case it was picture perfect. And again, this is kind of why I prefer to be more cautious, right? And this is a ton of points, so more than makes up for the stops in the prior day. And I think that's a pretty solid move, solid decision, I should say. And then the rest of the day is just selling off, so I think that was totally fine. All those are, of course, timestamped and called out, of course. That was at 36. Yeah, so right afterwards. And that was really it. So that's all those updates are talking about. And then on 1023, this is a situation where I think like being too conservative was kind of an error. So right off of the open, I mean, in the morning rundown, I was already talking about these two key levels on the ES. It was 6732.25 and NQ was 25003.25. And that's these levels over here. So that's this guy. The NQ is here. And the ES is here. Right, and so why are these two key levels on this session? It's because the end of the day breakdown, right, was under this low, and then we V-shape back over it. So if these sellers want to mean business, they got to get back under here. And so for the NQ, it's here, right? You break down here in the prior session, rally, V-shaped rally, and then here's the open. That key level, well, I mean, was really important, right? And so I'm typing that out, and then as I'm typing it out, it gets tested. And so I felt like I was kind of rushing into it to kind of put the orders in. So I hesitated, and then it just ripped, and it ripped for the entire day. So it's a miss, but I think it's worth talking about, just because this is like a concept that, comes into play very, very often, with this idea of like, okay, well, what kind of change is occurring? Remember, this is the change that these sellers tried to create yesterday or on Wednesday here, and then it gets negated on that same session. And so on Thursday's trade, the next day, if these sellers want to get back to break this breakdown, they got to get back under here. So very reasonable to be attempting a buy there, especially because it was like super cheap R. Stupid cheap to buy that pass back over it. Even just trying to play to the prior day's point of control was really good R. So yeah, that was a bummer. And then at that point now, I'm just pretty much looking for any kind of trade that I can take now. Just because I just like trading the first 30 minutes or whatnot. And so I figure I see this situation, this kind of context set up where the NQ has rejected from here. So this is the local daily breakout point that, again, the market told us it was important here, right? And then again, they told us it was important here, right? And so at 10:01, this is where we were at, right? So for the NQ at 10:01 on this day is here. We're already here, right? So we've already rejected from that breakout point. 179.5 is that local daily demand breakout point, and the ES also rejected. So here we are at 10. It's already rejected. It already missed coming to here. This guy, right? So again, that's these two levels. That's this guy over here, and this guy over here. So the ES and the NQ, they've already rejected from these key levels, and the rut was a little bit behind. So I was just kind of looking for a sympathy play here in the rut. The rut missed getting to its key level, which was, I'm just using it as like the lows of this 2-day supply here. It missed getting there, and so, or rather, it pop and drop there, and it was a little bit later to it. So I figured, okay, let me just sell this move back down under the. I thought I was selling the diva, but I got filled really poorly, so it was filled more closer to the Deepak. And I was looking for 24881 for key. Wait, oh, that's the key level. And then I was looking for the overnight high exit. So that's weird. Not sure why I didn't do my homework well. I guess the overnight high was. Let's see. Hang on. Overnight high was here. So I was just looking for that overnight high exit, and then I was looking out for more at the developing value area low, and also yesterday's value area high was pretty much the same level. So here's yesterday's value area high, and then here's a developing value area low. So I took another exit there, and then this was a very notable failure for these sellers to not touch down on the point of control of the prior day over here. Right, so I take note of this, that they did not touch the point of control of this session, and then I walk my stop down a little bit. Oh, I missed the walk, but I walked my stop down after seeing that, and then I stopped it out later in the session, but no biggie. It was still a pretty decent trade. And so that was it. Pretty, whatever kind of a week. Just just like just a couple of base. Well, actually, it was like this was a base hit, and then there was a really great NQ trade, and then there were those 2 ES stops. But just a whatever, just kind of weak. Nothing to write home about, but certainly pays the bills. And that is it. So again, if you're interested in joining a trading community where we, talk through our trade thesis and whatnot, sometimes we're just, hanging out, talking trash to each other. Or if you're interested in getting 2 novel trade ideas, swing trade ideas sent to your inbox every single week, updates from me, updates from Dan, live call outs for any trades that I do take on those swing ideas, then check out this room report, links in the description below. Otherwise, appreciate y'all tuning in. Thanks for sharing some of your time and energy with me. Hope you enjoy the rest of your weekend, and I hope to catch y'all next time. Farewell.